you should be able to go into the library, right? How to spot profitable timing signals. This is in here. You want to do some self-study? Trending with moving averages. Read this, commit it to memory, understand how this works. Then come into the library again, pull up Domino Indicator, read this. Just understand how this works. Or if you want a guided education, take the education program. So, an image like this is not really secret. What we've just created is the index, which is nothing more than, like about 40 or 50 technical indicators all smushed into one. And then we have a couple moving averages of the index itself. This kind of image is it's a little bit splotchy, to be honest with you. I don't think you can take a lot of information out of this. What I would like to see are M's and W's. And what I just see here is stuff sort of just oscillating back and forth. Maybe we hit a little bit of an extreme low there. If we could get a W to come in here, great. That would be awesome. And of course, you'll probably see W's in price. This thing just sort of grinding its way lower. I don't really see any real clear W's here. I mean, there was an attempted one through this. And really, just like moving averages on price, you can discern the trend just by what is the index doing, what's the fast moving average doing, what's the slow moving average doing. So if the slow moving average is higher than the fast moving average, then that must mean it's in a bear trend. And if the index itself is below the fast moving average, then that must mean that it's in a bear trend. And really, this is just, it's really, don't overthink this stuff. This is, remember I showed you, and I don't know whether, David, you've taken the education program. It might behoove you just to do the education program, but we cover moving averages in level 2, and I give you this document, and I suggest that you see if you can build a moving average trading system. And in this particular case, this is the 4-day and the 9-day and the 18-day moving average system, and how sort of one crossing the other works as a trading system. And when all three are pointing in the same direction, that's obviously a very powerful signal. And when you get these, we like to call them sort of rainbow crosses, where all the moving averages are pointing up and then they shift all instantly, they all point down. And that speaks to Nico Barber. I don't know whether we have in the Domino Indicator. This is all covered in the level 2 program, and this is the way that we recommend you use moving averages to help you understand market state. It looks something like this: awakening, uptrend, bull market, weakening, warning, downtrend, bottoming, and it just goes back and forth, back and forth. And this is it's in Dutch, so this is like fast moving average, medium term moving average, slow moving average. And so you can see those relationships. As they cross, you get different signals. So if you want to use 3 different moving averages, you can basically get a moving average system set up. And just based on how the moving averages are relative to each other, he actually creates a scoring system. And, when fast moving averages crosses a medium term moving average, or, whatever, that will change the scoring as they go and sort of look something along this line. So you can use the same logic when it comes to the dashboard signals, basically the same thing. So in this particular case, the index itself broke above both moving averages, but you can see that the fast moving average is still below the medium term moving average. So you're going to get like a bullish turn like Nico, but notice that was taken back very quickly because the fast moving average is still below the slow moving average, so that never turned back up. So that would be sort of like Nico Barber. That would be kind of like not this, but that would be sort of like this, but then this thing went back down and all the moving averages are all bearish again. Again, this is covered in the education program. You can build indicators that will actually visually show you what those relationships look like on a scoring system. And it's all about, just a momentum, right?